Is the United Kingdom on the brink of an unprecedented financial crisis? Its economy is currently facing its absolute worst situation in over 40 years. Inflation has catastrophically soared to over 10%, devastating household budgets nationwide. The British pound has crashed to historic lows against the US dollar, losing nearly 24% of its value. So, how precisely did Britain arrive at this alarming economic precipice? Let's uncover the shocking truth. The initial spark ignited with the tragic war in Ukraine, sending global tremors. Russia almost completely cut off gas supplies, which fueled 40% of Europe's consumption. As winter approached, energy prices across the entire continent skyrocketed beyond control. While the UK relied less on Russian gas, it couldn't escape the European market's fate. Its main supplier, Norway, maximized profits, pushing UK electricity prices nearly 4 times higher. Surging energy costs directly translate into drastically higher production expenses for businesses. Consequently, commodity prices across the board soared to unprecedented, record highs. This relentless pressure drove UK inflation into crippling double digits, the highest since 1983. Her new government swiftly introduced a controversial policy known as the mini-budget. It capped household electricity bills at £520, regardless of the true market price. On the surface, this generous support sounded like an excellent, much-needed relief for families. However, many economic analysts immediately identified it as a deeply flawed and dangerous decision. Crucially, the substantial energy subsidy was applied equally to everyone, regardless of income. Wealthy households consume twice as much electricity, yet pay only 1% of their income. Wealthier citizens were inadvertently incentivized to waste electricity without feeling the true cost. Experts estimated this policy alone could cost the government an astronomical £130 billion. That's equivalent to over 15% of the UK's entire annual national budget, a staggering sum.
Such an immense deficit would be catastrophic if the government failed to raise sufficient funds.
At the same critical moment, the government also implemented significant tax cuts. These cuts primarily benefited corporations and already wealthy individuals, totaling £45 billion. The underlying theory was that lower taxes would stimulate investment and foster economic growth. However, government spending had already consistently exceeded revenue for a decade. Public debt had already ballooned to an alarming $3 trillion, growing year after year. This staggering figure was nearly equal to the UK's entire gross domestic product. To finance both energy subsidies and the budget deficit, the UK desperately needed to borrow more. However, many international investors were rapidly losing confidence in the UK's economic outlook. This reluctance made them unwilling to purchase crucial British government bonds. To counter this, the Bank of England felt compelled to aggressively raise interest rates. Rates rose nearly 4 times higher than they were at the beginning of the year. Currently, short-term bond yields are alarmingly higher than long-term yields. This inversion is a classic, ominous sign of an impending economic recession, much like in the US. Compounding the crisis is the continuous, alarming depreciation of the pound against the US dollar. Imagine a savvy US investor borrowing $1 million to seek higher returns abroad. They borrow at 2% interest and confidently buy UK bonds yielding 4% annually. Under stable exchange rates, this interest rate difference would guarantee a profitable venture. However, The pound has tragically plummeted from $1.42 to just $1.09. Crucially, currency losses would completely wipe out any potential gains. After converting back to dollars, the investor ends up with a significant net loss. To desperately attract future investors, the UK must raise bond yields even further. Otherwise, it faces the catastrophic risk of losing access to vital bond markets entirely. In summary, the United Kingdom is currently trapped in a perilous, self-reinforcing vicious cycle. Skyrocketing energy prices force the government into massive, unsustainable borrowing. Dwindling investor confidence then pushes interest rates dramatically higher. These higher rates, in turn, escalate an already crushing national debt close to 100% of GDP. This complex economic entanglement directly impacts every single British citizen's future. The alarming risk of a full-blown fiscal crisis, or even bankruptcy, looms large. The path to true economic recovery for the UK is currently uncertain and fraught with immense challenges.
What decisive steps will the United Kingdom government take next to navigate this storm?
Only time will truly tell their fate. Stay informed and ahead.
Thank you for watching this deep dive. See you next time.